Hello, crypto world. Welcome to the Chart Historian. My name is Justin and I will be your host. So today I'm looking at the Bitcoin chart and I'd like to discuss what is currently taking place on this chart. Now I'm going to approach my technical analysis from a fractal pattern / chart structure point of view. So I will delve back into history and compare other structures that have taken place, other crashing structures, and compare it to what is happening now. Now, I have a thesis that says that in a correction, Bitcoin will produce one of two different types of crashing structures. I label them A and B. If you're interested to find out further about those two crashing structures, I recommend you watch this video here. Now, I currently believe that we are in a pattern B. So I'm going to go back and show you briefly what a pattern B looks like. I will describe it for you right here before we go. So essentially price comes up to a peak, it comes crashing back down, it retraces, and from that retrace it does 3 bounces down to a capitulation point, at which point it does a bounce at that capitulation point, and from there on it moves on to its recovery. So let's go back to the very first time that a pattern B took place. So this is the very first time a pattern B took place. Now I'm going to show you some of that structure that I was talking about. So here we have the peak, it comes crashing down, and then it does 3 bounces, 1, 2, 3, 1, 2, 3, to a capitulation point, and it does a bounce here. It's a very small bounce, after which it goes on to its recovery. Now, this is the very first time a pattern B takes place, and what's interesting is noteworthy is that this correction was from the peak to the trough, it was a 71.92. Maybe it's a little more, maybe it's a little less, but it was around a 72% decline. That is what I want to point out in this time frame. This took place in November 2010. Let's move along in history and see what else we can learn. Okay, so here is another B pattern corrective structure that took place in Bitcoin in 2011. So it came up, made a peak, and it through 3 bounces, it winds its way down to a capitulation point, at which point it bounces. Now this was a whopper of a decline. This declined 93. I have 93.73%. Maybe I'm off a little, could be a little more, could be a little less, but it was a large decline. The reason why I'm pointing that out is because that is a potential in today's current market structure. We could have a very large decline like 93%. Time will tell. We will see what takes place. I want to delve into this a little more and show you some other interesting things to look at. So what is interesting here and what is noteworthy here is that there's several things. One is that there is a theme that takes place in these corrections. Now that first one that took place, it was such a quick, fast little correction and there's not much clarity in that. But this one, there's a lot more. So price moves up, comes crashing back down, and then here is wave 1. We have an intermediate low right here in wave 1, and then it goes down to make its low, which completes wave 1. Wave 2 has another intermediate low right there, this black arrow. It bounces, goes down to complete wave 2, and then wave 3 bounces. It doesn't have an intermediate low. It does have a little bounce, but it's not like this big these big drawdowns that happen in these intermediate lows. Another thing to note is that if you zoom in here, you see that this first candle, it comes down, it does this has this large wick right here, and then it comes down to the intermediate low. This is all on the first wave, and then it does 2 bounces, and then it comes crashing down to start the next wave. In that crash down, it has this little pullback. So this actually repeats on this one. So here at the beginning of wave 2, you have that candle right here with a large wick, just like you had over here. You have the peak, and then it comes down, make an intermediate low right here. After that intermediate low, you have these 2 bounces, just like on wave 1. Well, you have them here on wave 2, and then it goes crashing down to complete the wave, and you have that little bounce right there. That little bounce exists right here. So this wave 2 is basically the same theme as wave 1. This is important information. In wave 3, you still have that same basic pattern. You have that long wick, which makes the first one right here, and then you have the first bounce, and then you have the 2 bounces just like you had here on wave 1 and just like you have here on wave 2, and then from there it goes down to its capitulation point, but it also has that little tiny pullback right there before that low. So right here you can zoom in a little more, make it a little more clear. So right there at this point it's the capitulation. So all this is to point out that there is a theme that exists in this corrective B pattern. Let's move on to the next time this takes place, the next B pattern, and see what we can find that confirms what we just saw here. Okay, so here we are, the next B pattern. Let me make this bigger, more obvious to see. All right, so we have a B that comes up, and this took place in December 2013. It comes crashing back down, and then you have 3 waves, 1, 2, 3, down to a capitulation point, at which point it does the B bounce, the bounce that makes a B pattern, after which it goes into its recovery. All right, so there is structure and a theme here as well, and I'd like to point that out to you. First of all, this whole decline took place, it was a 86.94, I roughly round it to like 87. So it was a fairly good sized decline, not near as big as the 93% decline, but nor as small as the 71 or 2% decline in the very beginning, but it's still a substantial decline. All right, so here we have, on wave 1, we have an intermediate low, and on wave 2, we also have an intermediate low. Wave 3, we do not have an intermediate low, but it does a little bounce where the other intermediate lows are on wave 1 and 2. They're just not these long drawdowns. Let's examine the intermediate lows a little closer, and we see that in this case, it was a double wick, one here, one there. We see the same pattern, the same theme repeating here on wave 2. Let's further examine this. So in wave 1, we have, it starts at a low here, comes up, does a little push up there, makes a peak. From there, this is the highest peak, and then from there it declines down to its low. Here we have that little push up right there, comes to a peak, and from there, this is the tallest peak, from there it declines to its low. So from here it declines to that intermediate low, from here it declines to that intermediate low. It also has, before the capitulation point at wave 1 and wave 2, it also has this little pullback right here. So we're seeing a theme on this one too. Now let's examine wave 3. Has that little push up, and then it goes to a peak just like wave 2 and wave 1 right there. So from that peak, it goes down to its capitulation point just like we have on wave 2 and on wave 1. So we have a theme that is taking place here. Now, right before that capitulation point, it has that little pullback and it goes to its capitulation point. This is what is much larger on these ones, that intermediate low. It's just a little bounce here, so I don't even count it as an intermediate low. I just count it as a bounce. It's the same basic theme that took place here and here. Now there is another important thing that I would like to point out in these structures. So the next one that takes place is today's chart. This is the next B pattern. So let's go all the way back to the very first B pattern, and I'm going to examine this a slightly different way. This is back in November 2010, and what I'd like to do is I'd like to examine the percentage declines that each wave did. So if you notice here, this is a 29.76 decline, the first wave. The second wave is a 29.64% decline, a little smaller, and the last wave is a 34.14% decline. So this is the largest one, and this one, the middle one, was the smallest decline. Let's move on to the next B corrective structure that takes place on the chart after this one and see what those declines look like. All right, so here we are. So we have wave 1, wave 2, and wave 3. So wave 1 declined a whopping 76.77%. Wave 2 declined 65.45%, and wave 3 declined 69.91%. So again, wave 3 was it was the second largest here. Wave 2 was the smallest, just like in the previous one, and wave 1 here was the biggest, and this was in 2011. Let's examine the correction that takes place after this one, which is in 2013. So here, the first wave, the decline was 65.80%. The middle wave, the second wave, was 59.89%. And these percentage could be a little off here and there, but for the most part, they're accurate. And the final third wave was 64.98% decline. So again, the smallest decline was wave 2. So today's decline has been, so first of all, I consider this wave 1, and I believe we're completing wave 2. So wave 1 was a 52.18% decline. Okay, so we have wave 1, we have an intermediate low, it comes to a completion point, we have wave 2, we have an intermediate low right here. We have that little pullback before the capitulation point on wave 1. I believe that this is likely the pullback before the capitulation point for wave 2. We also have a theme here. We have one peak here, comes up, makes a higher peak. So we see that here we have one peak, we have a higher peak, just like we have here. From there, it drops, goes sideways, and then drops again, drops, goes sideways a bit, and then drops again to its intermediate low, From here, we have a move that is kind of downward and then up, and then it drops downward, then up, and then it declines just like it declined. So here, I believe, are here and here. So what is coming next likely is it's going to drop to a capitulation point, at which point wave 3 will begin, and wave 3 will look something similar to this. So this one was historically either the largest or the second largest. This one was always the smallest. Let me make this a little bigger. So this one, once the third one begins, it could be the largest or the second largest. That is what history has to tell us. Well, I hope you found this video helpful. If you found it helpful, let me get these off. It would be much appreciated if you hit that thumbs up button. You can also hit the subscribe button, and you'll be notified of when I put out new content. I put out new videos on a regular basis. Like I said, I believe this perspective is a unique perspective. So if you do hit that subscribe button, you'll have a unique viewpoint on what Bitcoin is doing. You can also follow me on Twitter at Chart Historian. And one last important thing, I am not a financial advisor, planner, or anything like that. So nothing I present here should be construed as investment or financial advice. Well, I am so glad you caught this video. I hope you catch my next one. Have a great day, and bye for now.